From the line across the ocean and beyond the mountains, through the Sahara, always broken news, live analysis, expert discussions on trending stories in politics, socioeconomy, sports, and documentaries. So catch audience on the happenings around the globe. Focused on the fact today. 18.
Good day, viewers, and welcome to a fresh episode of ATN Business on Atlantic Television Network right here in the city of Port Harcourt. The medium of bringing the happenings in the sector of the society to our discerning viewers. This program is aimed at bringing to the doorstep of the viewers business, financial, and economic activities from all strata of society. Its delivery is accentuated through the various changes across the world, news about government economic activities, private sector business activities, and laced with expert opinions and stakeholders analysis, and also the corresponding reports. But before today's bulletin is presented, first the headlines. The stock exchange bearish trends as investors lose 623 billion naira. In commodities market increases and construction terminates the contract of Cantagua market and power sector. Federal government begins the testing of Zungeru hydroelectrical power plants. Let's go for a short break and return and reel out the details for today. Please stay tuned.
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring all sport news, live and discussions on trending stories in politics, socioeconomy, sports, and documentaries. So catch all the audience on the happenings around the globe. Stay focused on the fact today. 18. beyond the line, across the ocean, to the land beyond the mountains, through the Sahara. We bring almost the news, live analysis, expert discussions, on trending stories. All
Welcome back, and now let's get into the details for today's stock market. Starting from the stock market in Nigeria, stock market investors lost 623 billion naira last week as fund managers rebalanced their portfolios ahead of the first quarter results. The Nigerian capital market shed 1.08% to 103,467 points, while the market capital dipped by 1.05% to close last week at 58.5 trillion naira. According to analysts, the market trend was influenced by actions of market players who continue to digest the corporate earnings released so far, as well as efforts on the strength of expected earnings for the first quarter of 2024. The market saw increased trading activities. Change 3.68 billion units, 57.89 billion naira in 40,726 deals compared to 1.80 billion units valued at 52.04 billion naira traded in 38,550 deals in the previous week. The upward movement is attributable to the dominance of the window dressing activities by fund managers on the strength of expectations for the first quarter scorecards. All indices finished lower except for consumer goods and growth, which appreciated 0.9% and 0.32% respectively. Adverse price movements in May and Baker, Dangote Sugar, Ikeja Hotel contributed to the positive run on the consumer goods index. Conversely, the banking index dropped by 6.73% week on week on the back of adverse price movements in the bellwether banking stocks. Also, the insurance and industrial sectors closed negative from the previous week's close by 0.85% and 0.27% respectively. The downbeat trajectory was linked to the downward pricing of First Bank Nigeria Holdings, Sterling Financial Holdings, Julius Berger, Guaranty Trust Holding Company, Prestige, and etc. Meanwhile, the oil and gas sector closed the week on a relatively muted note compared to the previous week. Financial services industry measured by volume led by the activity chart of 2.881 billion shares valued at 46,000 to 46,201 shares traded in 21,257 deals, contributing 8.29% and 79.81% to the total equity turnover, volume and value respectively. The services industry followed with 479.156 million shares worth 2.282 billion naira in 142 deals. In third place was the conglomerate industry with a turnover of 123.59 million shares worth 0.65 billion naira in 2008 to 849 deals. The top three equities traded in volumes: Abe Mortgage Bank, Company of Nigeria and Zenith Bank, accounting for 1,175 billion shares worth 20.6 billion naira in 2,594 deals, contributing 59.10% and 35.70% to the total equity turnover volume and value respectively. Commenting on the market trend and projection for the second quarter, investment banker and stockbroker Tajuddin Olayinkan said that the market had a good showing in the first quarter of 2024, with most of the good performances recorded in January and February 2024. Even though the March 2024 had a positive performance for the index, it was a period of major socio-economic disruptions and profit taking, as investors struggled hard to deal with high inflation and negative real returns in the fixed income market, which necessitated the issuance of treasury bills at the above 20% effective yield by DMO. The industrial goods and consumer goods sectors outperformed the market in first quarter of 2024. According to Olayinka, the market is likely to witness a robust performance in the second quarter of 2024 as Central Bank of Nigeria continues to stabilize the exchange of the naira with inflows from foreign portfolio investors and diaspora remittances. Now we head on to the global oil market. Global crude oil market. Since Friday, Brent crude price surpassed the $90 per barrel threshold and surged past the $91 barrel per mark as of Sunday. And the global crude oil prices reported a single straight weekly gain and hit 6 months high levels as markets watched for the signs of any direct conflict between Israel and Iran that could further tighten supplies. The oilprice.com, the anticipation of Iran's retaliatory strike on Israel, a developing Mexico export shortage, and the continuation of OPEC plus cuts have boosted sentiments in the oil market recently. As of Sunday, the Brent crude was $91.17, up from $86.80 on April 1st and $81.92 on March the 12th, 2024. The WTI crude sold for about $87 over the weekend and from as low as $77.56 a month ago. Both the Brent and the WTI settled on Thursday at their highest level since October, according to newsmen. The Moorbank crude was at the rate of $91.15 on Sunday evening. The same Moorbank sold at $73.88 in December 2023. Nigeria's Kwa Ibo and Brass River crude stood at $95.05, up from as low as $74.83 in December last year. It was observed that the price of a gallon of premium motor spirits, otherwise called petrol, rose to $2,800 over the weekend from as low as $2,001 as of December the 8th. Oil prices have continued their upward trajectory, and investors' apprehensions regarding the potential disruptions in supply due to escalating geopolitical tensions. Both global benchmarks, that is Brent crude and WTI, clocked over the 4% gains in the past week after oil-producing Iran vowed revenge against Israel for an attack that killed the high-ranking Iranian military personnel, according to world reports. When crude prices begin to soar in March, it was said that the string of Ukrainian drone attacks on Russian refineries, which were affecting fuel output in the world's largest exporter, was one major reason for the rise in crude prices. The crude prices dipped a few weeks after the downward trend in the prices of crude oil in the global oil market was blamed on the weaker United States gasoline demand and data and reports of a United Nations draft resolution calling for a ceasefire in Gaza. According to press, though gasoline inventories fell for a seventh week from 3.3 million barrels to 230.8 million gasoline products supplied, a proxy for product demand slipped below 9 million barrels. At the moment, the sharp increase in oil prices was because players in the oil market were watching for signs of any direct conflict between Iran and Israel that could further tighten supplies. So that's how it becomes when two countries that have impact on the global oil market are about drawing swords and going into conflict. It also affects the price of crude market. Let's see the developing stories between Iran and Israel, and I wish it doesn't go lower. It does not go to the south. It should instead be stable. Now let's go into Nigeria's foreign exchange reserves, and it has taken a significant hit, dropping by approximately $1.02 billion within 18 days as the Central Bank of Nigeria steps up efforts aimed at defending the naira. On March the 18th, 2024, foreign exchange reserves stood at $34.45 billion. I'll take that again. On March the 18th, 2024, Nigeria's foreign exchange reserves stood at $34.45 billion but by April the 3rd, it dropped by $33.50 billion based on the latest data from the Central Bank of Nigeria. And before the current decline, the reserve had been steadily growing, witnessing a remarkable 43-day surge between February the 5th and March 18th, 2024, during which it appreciated to $1.28 billion. The Central Bank of Nigeria attributed this rise to the increased remittances and payments from Nigerians abroad and heightened interest from foreign investors in local assets, including government debt securities. Additionally, reforms in the foreign exchange market and an increase in oil production contributed to the reserve growth. However, the trend since March the 18th indicated a significant drawdown in the reserve. After peaking at $34.45 billion, it gradually declined to $34.39 billion on March the 19th, $33.57 billion by April the 2nd, and finally $33.50 billion by April the 3rd. This rapid decline of $1.02 billion within 18 days underscores the pressure on the reserve as efforts continue to stabilize the local currency. The CBN has actively been intervening in the foreign exchange market to support the naira, which has faced intense pressure from various economic factors. These interventions often involve the sale of dollars to maintain liquidity in the market, a strategy that has likely contributed to the decrease in foreign exchange reserves. During the 18 days under review, the Central Bank of Nigeria has made two significant announcements. First, it declared the complete clearance of valid foreign exchange backlog. Secondly, It facilitated the sale of foreign exchange to bureau de change operators in Nigeria at an exchange rate of 1,251 naira per dollar. Usually, Nigeria's foreign exchange reserve reflects the country's balance of payments and its ability to meet international obligations. A substantial decline in reserve can erode investor confidence, potentially leading to a credit ratings downgrade, which could further impact on the nation's borrowing costs. The International Monetary Fund (IMF) recently projected that Nigeria's foreign reserves would experience a significant reduction, plummeting by 24 billion naira by 2024. The IMF foresaw a challenging period for Nigeria's financial accounts through the 2024-2025 season, driven by the absence of new Eurobond issuances, substantial repayment of existing funds, and Eurobonds totaling $3.5 billion and continued portfolios outflows. Meanwhile, the federal government has said that it will issue domestic bonds denominated in foreign currency in the second quarter of this year, precisely in the month of June, a move which some economists believe will stabilize the naira and the nation's reserve. Good to hear. We are open for advert placements, bookings, and commercials. You can connect with us and watch us on our ATN socials, Facebook and YouTube, Atlantic Television Network, on Instagram and TikTok, Atlantic TV Network 1, on X, which is formerly Twitter, we are Atlantic TV Net, and also watch us live on our website www.atlanticnetwork.tv. And let's move on to some other bulletins concerning economy. What we got here is that the chairman of the Lagos State chapter of the Nigerian Association of Small-Scale Industrialists, Mrs. Gertrude Akimian, has disclosed that 30% of the over 24 million registered small and medium enterprises in Nigeria I'll take that again. Calm down. The chairman of the Lagos State chapter of the Nigerian Association of Small-Scale Industrialists, Gertrude Akimian, has disclosed that 30% of over 24 million registered small and medium enterprises in Nigeria folded up last year. They folded up last year. 30% of small and medium enterprises in Nigeria folded up. Akimian stated this in a telephone conversation with the press in Lagos while reacting to the recent removal of electricity by the federal government. Akimian said at least 30% of the businesses I am aware of have shut down. Many called me to say that they have shut down, and I told them that we will try to see what we can do to manage the situation and all that. How we could do one day in and out. The shutdown was between last year and this year. The press reports that subsidy on electricity has been completely removed from the tariff payable by the power consumers in the band A category, who constitutes about 15% of the total number of power users in the country. The government announced the hike in the electricity bill at a press briefing in Abuja organized by the National Electricity Regulatory Commission (NERC) on Wednesday, stating that those affected will now pay a tariff of 225 naira per kilowatt hour, about a 240% increase from the previous 68 naira per kilowatt hour. According to Lagos National Association of Small and Medium Scale Industrialists chairman, most of the association's members have started selling off their equipment. When someone is selling his or her production material, what does that tell you? They are shutting down. They are all up for sale, she declared. Ahimian reiterated that the removal of electricity tariff will reduce the profit margins of small and medium-scale enterprises as power contributes to 50% of their operating costs. When you impute the cost of electricity or diesel or any other source of power into your system, it takes almost 50% of the cost of business. So if you are spending 50% of the total cost of your business on just power, where will you see the profit from? She quizzed. She added that people now stay in businesses by operating once or twice a week to save costs. I have seen people in people's businesses swing their operations whereby they operate like once or twice a week. They just come to do their production and then shut down. They can't continue. You don't do business like that, and of course it is affecting workers because people will be laying off their staff members, she lamented. Whoa, that is grim news for small and medium scale industrialists. More news to come. The Lagos state government has terminated the contractual relationship with Bridgeway Global Project Limited on the development of the Kantagua markets. The special advisor to the Lagos State Governor on EGIS and the urban development, Dr. Olajide Babadunde, disclosed this during an inspection of the vast land area earmarked for the relocation of Ikeja Computer Village in the urban regeneration program of the state government. He said the contract with the Kantagua Market project consultant, Bridgeway Global Project Limited, has since been terminated over 2 years ago due to non-performance of the contractor on the agreement reached with him, and it is therefore illegal for him or his representatives to collect any fees or money from anyone in the disguise of development of the market after termination of his contract. The Urban Development Department in the Ministry of Fiscal Planning and Urban Development, headed by Bola Bello, has taken over the management of the Kantagua project till further notice. He also directed that anything that has to do with the project control has to be in line with Lagos State Building Control Agency's guidelines and regulations. Speaking on the fate of subscribers who have paid Bridgeway Global Project Limited for the allocation of shops in the market, Babatunde said, all of you that have paid any money to the project consultant after his contract has terminated, I can assure you that Bridgeway Global Project Limited will be made to refund all fees collected illegally to the subscribers after the conduct of proper identification and verification by the state government to determine the real occupants and how much they paid. From this moment, nobody should pay any kobo to them again, as they no longer represent the state government on this project. The Director of Urban Development, Bola Bello, and her team will be the ones to represent the state government on the market project till further notice. And if you have anything to do on this market project, please liaise with her. He directed that 8 members of staff of Bridgeway Global Group Project Limited found in the market gates collecting tolls and fees be arrested and prosecuted in a court of law. The general manager of the Lagos State Building Control Agency, Bolahan Oki, while addressing the multitude of subscribers and sellers in the market, warned against any environmental infringement as well as blocking roads leading into the market. He warned nobody should pay any money to anybody for now till further notice when things are put in the right perspective. He disclosed that some buildings and structures erected illegally in some parts of the market will give way to proper development of the market. The chairman of the Committee on Fiscal Planning and Urban Development in the state and the House of Assembly, Ogunkelu Sylvester, along with other members of the House of Assembly, visited the market to carry out a fact-finding mission. He stated that they were sent on the directive of the Speaker in response to a petition filed by the leaders of the Market Association. He added that findings will be delivered to the Speaker for further action. Right here we have news from the federal government saying that the federal government on Sunday announced that testing, oh, this is big, this is good, this is wonderful, this is power generation, this is power generation. Let's go. Federal government on Sunday announced that testing has commenced on the 700 megawatts Zungeru hydroelectric power plants ahead of the evaluation of electricity from the facility to the national grid. It also stated that the $1.3 billion project located in Niger State has been connected to the national grid, in contrast to claims in some quarters that the plant was not connected to the grid. The Minister of Power, Adebayo Adelabu, discussed this while providing answers to industry questions contained in a document released in Abuja on Sunday by his special advisor, Strategic Communications and Media Relations, Bolaji Tunji. The Zungeru hydroelectric power plant is a major infrastructure project with the capacity to generate 700 megawatts, making it the second largest hydroelectric plant in Nigeria, behind the Kainji Dam, located in the Kaduna River near the town of Zungeru in Niger State. The plant is to generate 2.64 billion kilowatts per hour of electricity annually, meeting nearly 10% of Nigeria's domestic energy needs. The plant provides flood control, irrigation water and fish breeding facilities, and its construction partners include the consortium of Chinese firms Sinohydro Corporation Limited and China National Electric Engineering Company. Industry analysts say that the project is expected to be a significant boost to Nigeria's power generation and is to contribute to economic development in the region. Recall that in May 2023, press reported that the federal government stated that it had connected Zungeru hydroelectric power plant to the national grid, giving a boost to Nigeria's power generation. The former Minister of Power, Abubakar Aliyu, has announced that the connection of the plant to the grid during a send-forth ceremony organized by the power sector officials for him and the former Minister of State for Power, Godi Jediaba, in Abuja. We have from the Nigerian Stock Exchange Group, the NSG. Now let's go on. The Nigerian Exchange Group has said that it has investments in the Ethiopian Securities Exchange, and it was a strategic decision for the benefit of its stakeholders. The NGX Group confirmed to press on Friday that it invested in the ESX, that is the Ethiopian Securities Exchange, during the recent fundraising that took place in the Horn of Africa nation, where the boss raised about 26.6 million US dollars. In a statement on Sunday, the NGX said it was amongst the top institutional investors that had injected capital into the operationalization of the boss, or alongside FSD Africa, a UK-backed non-profit financial institution, and Trade and Development Bank Group, the financial arm of the Common Market for Eastern and Southern African Trade Bloc. This pivotal move not only marks NGX Group's entry into East Africa, but also underscores its commitment to driving growth and innovation in the African capital markets, while strategically positioning itself as the largest foreign institutional investor in the ESX. The investment in the Ethiopian Stock Exchange reflects the NGX Group's confidence in the potential of Ethiopia's rapidly growing economy and capital markets. By partnering with EXS, the NGX Group aims to support the development of a vibrant and resilient financial ecosystem in Ethiopia, fostering increased investor participation and capital formation, it stated. Speaking on the development, the chairman of the NGX Group, Umaru Kwairangwa, said that we extend our congratulations to the ESX on its successful capital rise and commend the government of Ethiopia and the private sector for their support in bringing this pioneering initiative in the country to fruition. Our partnership with ESX is resounding affirmation of our unwavering dedication to promoting economic development, transparency, and exemplary corporate governance standards that foster an environment conducive to inclusive growth, even as we aim to maximize value for our esteemed shareholders. According to the CEO of the Ethiopian Securities Exchange, Tilahun Ismail Kasahun, the boss is thrilled to announce that the capital raise for Ethiopia's first securities exchange has exceeded expectations, reflecting the unwavering confidence of investors in the potential and prospects of Ethiopia's economic landscape. We are pleased to welcome the NGX Group as a strategic partner, building upon the existing support we have received from the NGX Group, he remarked. With the investment, Popola will join the board of the ESX as a nominee of the NGX Group. On surpassing expectations, ESX, in a statement posted on its X handle on Thursday, said, "We are thrilled to announce that ESX closed its capital raise significantly oversubscribed by domestic and foreign investors. The exchange witnessed dramatic interest by domestic and foreign commercial investors, obtaining a whopping Ethiopian dollar of 1.5 billion. Representing a subscription of 240% of its initial target capital raise of Ethiopian 631 million, with participation by a total of 46 with participation by a total of 48 domestic and foreign institutional investors across the financial and non-financial sectors. ESX was established in October 2023 through a pioneering public-private partnership with the government of Ethiopia through Ethiopian Investment Holdings, its strategic investment arm, as the founding shareholder. You're still tuned on to our ATN Business on Atlantic Television Network. Let's go for this short break and we'll be back in a jiffy. Stay tuned.
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring all sport news, live analysis, expert discussions on trending stories in politics, business, socio-economic, sports, and documentaries. So catch all your bets on the happenings around the globe. Stay focused on the fact today. On ATN.
Glad to have you back on ATN Business on Atlantic Television Network, right here in the city of Port Harcourt. And now let's go to the rest of our international stories. Heading to the global shares, and then the global stock exchange mostly rose on Monday as investors looked ahead to earnings reports from the top global companies and a consumer prices report that will be a gauge for the US inflation. France's CAC 40 gained 0.4% in early trading to 8,095.02, while Germany's DAX edged up 0.5% to 18,258.45. Britain's FTSE 100 inched up less than 0.1% to 18,258.45. And US shares were set to drift lower, with Dow futures down on 0.1% at 39,198.00. S&P 500 futures fell nearly 0% to 5,248.50, and Japan's benchmark Nikkei 225 jumped at 0.9% to finish 39,347.04. Sydney, that's Australia, S&P/ASX 200 gained 0.2% to 7,789.70%. South Korea's Kospi rose 0.1% to 2,717.65. Hong Kong's Hang Seng added less than 0.1% to 16,732.85, while the Shanghai Composite slipped 0.7% to 3,047.05. As risk sentiments took to bounce from earlier jitters, and gains may still be somewhat limited. However, as the lead up to the key US consumer price index this week could leave some reservations in place, said Yip Jong-rong, market analyst at the IG. The US government releases its March report on consumer prices later this week. I hope to see that. And the US employers added a surprisingly strong 303,000 workers to their payrolls in March. Wow. 303,000 workers to their payrolls in March. And the strong job market has helped fuel consumer spending and earnings growth for businesses. And the US Federal Reserve's benchmark interest rate remains at its highest level in 2 decades as a result of historic rates hike meant to tame inflation. Strong employment and consumer spending have raised concerns about getting inflation below 3% and heading towards the Fed's targeted rate of 2%. It won't be easy. The analysts also said that energy prices have been rising lately, a sore point for economies like Japan that imports almost all its oil, although they reserved the cost in Asia on Monday. Adding to the upward pressures have been signs of Help me now. The Biden administration will push China to change an industrial policy that poses a threat to U.S. jobs. Treasury Secretary Janet Yellen said on Monday that after wrapping up 4 days of talks with the Chinese officials. She also said in Beijing that they had difficult conversations about national security, including American concerns that Chinese companies are supporting Russia in its war in Ukraine. But the focus of her trip was industrial policy and what the US and Europe describes as manufacturing overcapacity in China. Wealthy nations fear a wave of low-priced Chinese exports that will overwhelm factories at home. Yellen cited the manufacturing of electric vehicles and their batteries as well as solar energy equipment, sectors that the U.S. administration is trying to promote domestically as areas where the Chinese government subsidies have driven rapid expansion of production. China is now simply too large for the rest of the world to absorb this enormous capacity. Actions taken by the People's Republic of China today can shift the world prices, she said, using the acronym for China's official name, PRC. When the global market is flooded by artificially cheap Chinese products, the viability of American and other foreign firms is up for question. She said that the U.S. would host Chinese counterparts for their fourth economic and financial working groups meetings next week, where these issues will be discussed at length. Last September, the U.S. and China formed working groups in an effort to ease tensions and deepen ties between the two nations. The upcoming discussions will coincide with the IMF and the World Bank spring meetings. It is unclear how China will respond to such calls. European officials have repeatedly raised the issue on visits to China with no sign of any change on the Chinese side. Moreover, one of the leaders, Xi Jinping, his major goals is to build the nation into a major power so it doesn't feel compelled to bend to outside pressure. But overcapacity also affects China. The price wars in the electric vehicle sector are expected to drive some markets and some makers out of business. And experts have called for better coordination of policies designed to promote new technologies. The government agreed during Yellen's visit to start talks on what the two sides called balanced growth. We intend to underscore the need for a shift in the policy by China during these talks, Yellen said at a news conference held outdoors on a balmy spring day in the U.S. ambassador's residence in Beijing, advocating for higher consumer spending in China in response to its large government subsidies to solar, electric vehicles, and lithium-ion batteries industries. Yellen said, if consumer spending were higher as a share of GDP, there would be less need to have such large investments going into building supply of green products. And our esteemed viewers, and this is where we call it wraps on this episode and this edition of ATN Business on Atlantic Television Network right here in the great city of Port Harcourt. I am Raymond Ken Mbata, hoping to meet you here again same time tomorrow, and we are open for advert placements, bookings and commercials. Stay connected on our ATN socials, Facebook and YouTube, Atlantic Television Network, on Instagram and TikTok, Atlantic TV Network 1, on X, formerly Twitter, Atlantic TV Net, and watch us live on our website www.atlanticnetwork.tv. Peace and unity are the pathways to progress. Thank you for watching and keep staying tuned.
From the line across the ocean to the land beyond the mountains.